All right, let's get rolling. I'll dive right in here. Marcus, you recently published a piece on Japan's monetary policy, which has been all over the news. Just to sort of summarize my understanding of the very basics here, Tokyo, and in particular the Bank of Japan, is trying to push an eventual move away from its ultra loose monetary policy, including negative short term interest rates. But it's doing so quite slowly and carefully, much to the chagrin of global media outlets, because it has plenty of economic concerns about can inflation be sustainable, move out of eternal deflation and actually keep economic growth moving as they move toward this more, some would say, responsible monetary policy. So can you sort of, one, check my context there, sort of, and add any context you'd like to add to that, and then give us sort of an outlook and implications for where we're going with this?
Yeah, so just to put this in a broader context, Japan, the Bank of Japan is the only the only central bank that still has negative interest rates. And of course, it is also the economy that, in a sense, invented the broader quantitative easing policies and particularly yield curve control policies. And so it entered that kind of policy way before the other major central banks, but is also exiting it late. So of late, of course, most other central banks have abandoned their policies, and the question sort of hanging over the Bank of Japan is what is it supposed to do? Inflation has also been much higher in Japan over the past year and a half, 2 years, as everywhere else. And so my interpretation of what the Bank of Japan has been doing over the past 6 to 9 months is to really bring about some reform of their monetary policy framework. Because just for some context, if you commit yourself to negative interest rates, and if you commit yourself to a yield curve control, you don't have that many instruments to play with to counter inflation should that become necessary. But Chase, as you rightly point out, the BOJ is not entirely convinced that inflation is here to stay. So they have to kind of engage in a balancing act. On the one hand, I think they want greater flexibility in case inflation stays high. They have the tools to fight inflation without surprising markets by changing the policy framework completely. On the other hand, they're not entirely sure that inflation is here to stay. And I'm going to sort of put my money on this. I think there's a real concern that inflation might dip back. We're already seeing disinflation in the US and in Europe. True, it's mostly headline inflation rather than core inflation, but we'll have to wait and see. But I think there's a real chance that Japan might sort of dip back into a low inflation scenario. But be that as it may, the Bank of Japan wants to have a framework in place that allows it to be able to react to high inflation should this become necessary, without in the same process tightening policy. In a sense, that's been happening. If you look, for example, at the 10-year yield, which kind of is a benchmark yield for all economies, that has been trending up. So if you will, there has been some sort of tightening, at least in nominal terms. But I really would like to sort of think of this as setting the stage and allowing the central bank to be more flexible in case inflation is here to stay, rather than change the policy framework overnight and upset markets.
So I did want to ask, maybe it's a basic question here, but was Japan's fight with deflation, is this structural? Is this just Japan's lot in life? They're wealthy. They have a diminishing population. Is this just what happens when you become so wealthy and you start having lower birth rates, that spending and sort of inflation and wage hikes, those things, that they're a developing country phenomenon? Or is there a real chance here that Japan can actually move beyond permanent deflation?
I wished I knew. I think the reality is when Japan started being confronted with like low inflation and deflation, it did come out of a long period of stagnation. It did have massive banking problems. So the idea or the interpretation here was, well, it's the banking problems, there's no credit intermediation, Japan saves too much, so there's not enough demand. In all fairness, the Japanese government, part of the reason why the Japanese government debt is so high is because the Japanese government has been trying for the longest time to boost the economy through fiscal spending, but it hasn't really been able to increase inflation on a sustainable basis. On the other hand, coming out of the global financial crisis in 08, 09, we've seen very low inflation and a real concern about deflation in the United States and Europe as well, which of course then led these central banks to follow the Bank of Japan in a slightly different way, to engage in unorthodox monetary policies like quantitative easing and zero interest rates, or in the European case, even negative interest rates. So I think the jury is still out whether this is what happens after a financial crash, or whether there's also, as you seem to be alluding to, a structural component like demographic aging. I don't think we know. If you open the Financial Times today, you see different views. Some people saying high interest rates and high inflation is here to stay. The argument here is you have a green transition, you have supply chain re-engineering, you have potentially high debt. All of this might lead to higher inflation and higher interest rates in the longer term. Of course, traditionalists would say, well, to the extent that we have low inflation, this is here to stay because of the savings and investment imbalance. So I think these things change. I'd be cautious to say that's just demographic aging. I think demography may play a role, but just to be fully transparent on this, there are very serious economists out there, and really, as you expect from economists, they never agree. Some people think that demographic aging is a major factor. Others will say, no, that's not a factor. In fact, demographic aging should be increasing wages and hence inflation because you have a shrinking labor pool. And so when we look at Japan and we want to understand why we had deflation or disinflation or low inflation there for a long time, it's because they came out of this financial crisis and there was excess savings, and or it was China's rise and the kind of competition that Chinese exports represented to the Japanese economy, which kept wage inflation and labor costs down. So I think the jury on this is still out. There's really no answer. I wished I knew, but I don't.
I imagine there's a similar answer to the next question I'm going to ask you, but broadening out, you said Japan sort of started the party of really low interest rates, and the rest of the world hopped on, and Japan is sort of late in moving beyond them. Is this sort of the death knell of that policy, that like, hey, this doesn't work? Or is this just cyclical, right? Interest rates rise, interest rates drop, and we'll get back to zero interest rates, give it 5 or 10 years in the US, in Europe?
Well, that really depends on how you answer the question of whether it's demographic changes that drive this or it's savings investment imbalances. And of course, they're not mutually exclusive explanations. I think it depends. So I really think if you think that a large part of this low inflation was the integration of China into the world economy, the supply chain restructuring, and all the rest of it, then there's of course a chance that if China were to itself create inflation, and remember there were real concerns about labor inflation and companies leaving China because of high labor costs. This is not necessarily incompatible with the idea that we're in a situation where very low inflation in China. Even there, I can't really tell you whether this is here to stay. It might be a cyclical thing that we have to understand as part and parcel of the broader rebalancing that's happening in China. I think it's going to be very difficult to say. I think a lot of it, in my view, will depend on fiscal policy and to the extent to which the government will simply add to demand. But even here, you have to assume that there will be a limit to this, because at some point you can't really increase debt anymore. Then again, in the Japanese case, that was possible. Japan has a debt ratio of 260% of GDP or thereabouts. It doesn't have debt problems, but it still has, despite all this fiscal spending, it has not been able to increase inflation. So there's a long story short of saying that I really don't know. And I think anyone who tells you they do, they don't. I think the best you can do here is sort of commend the Bank of Japan. I think it's very much aware that there's still a downside risk to inflation. And if you think about it, and Chase, I think you know the numbers better than I do. I think the government just revised its inflation forecast for next year to something like 2.8%. Sure, 2.8% is not 2%, but we're not looking at sort of inflation spiraling out of control here. Also, when you look at some of the wage increases we've seen in Japan, I know some of these things have hit the headlines, but overall, the Bank of Japan seems to think that a lot of the inflation still comes from like higher import prices. So unless we see a sustained move towards higher prices and higher wages, which we are not, I think the Bank of Japan is doing the right thing by allowing itself to be in a position where if push comes to shove, it can move the needle, it can change interest rates even on the short end without upsetting markets. I think that's where we are, and I think this is a prudent policy and quite strategic in that sense.
I wanted to follow up on that wage part of this, because Prime Minister Fumio Kishida of Japan has said, I would like to put pressure on companies to raise wages, to make regular wage hikes something that's not just happening this year, but to continue it into the future, so we can have this a beneficial cycle of moderate inflation, moderate wage hikes, and nobody's hair is on fire because their prices are rising while their wages are not rising. Does Tokyo have much capability to say we're going to try to enforce that wage hikes go up over a certain amount of time? I know Japan's a market economy, but is this just wishful thinking by Tokyo?
I think it's wishful thinking, and yes, I mean this makes good sense for the government to say this, because after this bout of inflation, people have lost in real terms in terms of wages. So yes, it makes sense to say, hey, corporate Japan, please raise wages to make up for these losses. I don't think that this works. You can't just tell companies to raise wages. It's not going to happen. It is a market economy after all. Typically, the best you can do is raise wages in the public sector in the hope that somehow this spills over to the private sector, because then public sector employment becomes more important. But I don't really know what the composition of the public sector workforce is. And even there, of course, the question is, if you do this, then you're going to have to run a larger fiscal deficit. So to my mind, that sounds more like politics. But it's interesting that if on the one hand you're worried about inflation, and on the other hand you're saying, well, please raise wages, it seems like the government is pulling in one way. I think the Bank of Japan is doing the prudent thing to look at this and try to understand what is really going on. Of course, they will say moderately rising wages is a good thing, but you don't want to sort of encourage this in a situation where you might be worried that inflation spirals out of control. So again, I think the Bank of Japan is taking a wait and see approach here.
Yeah, and that's where we also bleed into politics too, of what you say, trying to talk up markets and trying to talk up support for Fumio Kishida and his LDP, which is at record lows since he came into office. And I think LDP support is at record lows in the last decade. So they're really, I don't want to say scrambling, but scrambling to find a positive light to put on this, and a positive light to this sort of new position that Japan finds itself in, of they've got inflation, but they're not really sure how to manage it just yet, and they want to move out of the monetary policy that they've got, but they're taking a slow tack there. So I think they're trying to ease the political pain of these moves that they know they have to make, but that's a tall order. Yeah. All right. Well, that's a natural conclusion. Me concluding my own thought there. Thanks so much, Marcus. As for our listeners and watchers here, if you'd like to peruse our analysis on this and many other geopolitical topics of the day, please check out our content at worldview.stratfor.com, or you can learn more about our business services at ranenetwork.com. Thanks so much.